So I'm Alan Cohn from Steptoe, and every year here, I feel like I get asked to do the crypto regulatory panel. And it's not always known as the most gripping panel here at the GBBC Lounge, but we're going to try to make that a little different this year. We're going to keep it lively. We have a great panel. And you know, folks come sit down and ask questions, be engaged. We'll have about 40 minutes. We'll talk through. And what's really great is we have a panel from a number of different places around the world. So this is not going to be a Trump meme coin discussion. We're going to be able to get beyond that. And go ahead. So our panel, Maha Al-Saadi, Head of Regulatory Affairs for the Qatar Financial Center Authority. Simon Kim, the CEO and Managing Partner of Hashed. Clara Guerra, the Director, Dr. Clara Guerra, the Director of the Office for Financial Market Innovation and Digitalization for the Government of Liechtenstein. And Andre Portillo, who's Partner and Head of Digital Assets for BTG Pactual. So, we're going to start by just kind of setting a little bit of a foundation. I'm going to ask each of the panelists just to talk a little bit about the state of digital asset regulation in each of their jurisdictions, any unique features, and any unique gaps or challenges. So, Maha, do you want to start?
First of all, thank you so much for having me. It's such a pleasure to be part of the GBC's panel with such great experts that I always look up to. When we look into the way that Qatar looked into regulating digital assets, we had several considerations that we looked into. First is we need to separate the financial regulation from the technology. So we need to look that we are not hindering innovation. The use of blockchain in general industries should not be treated in financial regulation. We are one of the few jurisdictions around the world that still bans the use of cryptocurrencies and stablecoins. So our focus was on real-world asset tokenization and with a main focus on security tokens and fund units. After looking into several regulations and ways of regulating digital assets, we felt that the Liechtenstein model was the better suited one for our needs. So this is the stance that we have taken, and we decided that within a year time, we'd look again into the regulation and see where we can update it and upgrade it. In addition, we are working with the Qatar Central Bank to come up with a digital asset lab. So far, we have 22 participants across industry, from real estate to identity to carbon credits. And we're working with the Central Bank of Qatar on that because we're an onshore jurisdiction and we need access to cash on ledger. Thank you.
Hi, my name is Simon Kim. I'm a CEO at Hashit, the largest and most active Web3 VC investor from Korean market. So Korea, these days, Korea is famous for three things. Number one is BTS. Second one is kimchi, and third one is crypto. And actually, second one and third one is very combined. So you are familiar with a kimchi premium, in crypto. So Korea market, Korea retail market is one of the most kinds of reacting market in the world. So sometimes the KRW pairs trading volume surpass USD volume. So at least KRW volume is at the second largest pair in the world. And in Korea, the funny thing is not only for the millennial or Gen Z, even my grandfather ages love to trade in crypto. So it's a very phenomenal in Korean market. So anyway, in Korea, the regulation is setting up by three steps. So first one is a kind of AML and KYC stage. And the second one, it is established last year about the consumer protection. And the third stage will be introduced this year, will be market regulation. So it's not here yet. So actually, Korea's regulation situation is very behind than many of other countries, because one of the reason is when the when the world firstly met the first crypto bull in 2017, we impeached our president at that time. So there was no governance in the first mega bull of the crypto. So our government have not reacted at anything. So one of the example is until now on, Korea is one of the very few developed country having no crypto tax for the individual. So it is also determined there will be no crypto tax until 2027. So it's a very unique situation. So anyway, our regulation setup is being very delayed. And even, you might be familiar with some of the recent news from Korea. Our recent president is also being progress of being impeached. So there are lots of bills from Congress in Korea about the regulating or empowering of the crypto industry, but it's being delayed a lot. But certainly, so this is a kind of a common thing in Korea. It's a kind of history of Korea. We impeached our president, and many of our presidents will be in jail, but we are okay to setting up the better.
Same.
Yeah. So anyway, I'm quite sure that from this year we'll set up the new market regulation, and also there will be a new stablecoin law will be introduced in Korea second half of this year, and yeah. So this is a very pivotal moment for Korea. And one of the limitation as a venture capital in Korean market, in Korea, still the venture capital fund could not invest in token or public digital assets. So that's the reason why recently we are setting up our new vehicle based in Middle East. But anyway, in the few 1 to 2 years, it will be also resolved, I believe.
Great, thanks.
So, thank you. Welcome also from my side, and thank you very much to GBC for the generous invitation. It's a great pleasure to be here. About Liechtenstein. Who has not been to Liechtenstein yet? Oh my God! Well, good you're here, so I can give you some incentives and to actually come, because it's certainly a place you have to see. And why? Well, with regards to blockchain, we have been one of the first jurisdictions to introduce really a comprehensive legal regulatory framework, which came into force and application already at the beginning of 2020. And so these are the 3 points that I would like to make, what our advantages and unique selling points and competitive advantages towards other jurisdictions are. So we are one of the first countries who introduced these frameworks. It is a comprehensive one, so it's not focused on just tokenized financial instruments. It's really expanding over the whole of the token economy, which is important because we never wanted just to focus on crypto speculation or anything in that, on just cryptocurrencies and or ICOs. We really wanted to address the whole of the token economy and real world applications. So for this, the legal basis that we have introduced with our civil law is the foundation. Then secondly, because of that, we are actually a proven and trusted jurisdiction, because it's a registration and supervision regime for crypto asset service provider, so something very similar to what is coming on now with MiCA, and there we have now this proven track record and experience over 4 years of registering and supervising crypto asset service provider, and that is definitely one very important part, because we've seen with our financial market authorities and all the authorities and the whole of government involved what a steep learning curve that is, and what it needs to understand the industry, understand the technology, and understand how it can be regulated in an equitable and proportionate and innovation-friendly way. And the third part is, if you don't know yet, Liechtenstein is very geographically and politically uniquely positioned between the EU and Switzerland, because we are part of the European Economic Area, and at the same time we have very close economic and political ties to Switzerland, which also allows the registered and licensed service providers and market players in Liechtenstein to venture into both markets. Thank you.
That's great. Andre.
Well, first of all, pleasure to be here. I think it's my 5th time here at Davos and my 5th time at GBBC, so thanks a lot for GBBC. Sandra, pleasure to be here again. Briefly, regulation in Brazil, it's evolving, started evolving slowly. Now it's, the speed is increasing a lot. The first, I would say, regulation in Brazil, of course, was from the Brazilian IRS. That was in 18, okay, where they basically say, okay, if you make money trading crypto, you got to pay some taxes, right? Right now, I would say it's a very, I would say, broad and comprehensive framework that the Brazilian IRS have. You even have to, they have the first 100 coins already listed on the system, and you need to declare each one where you make money. Yeah, it's like that. And we get a law in Brazil passed in Congress in the end of 2022, okay? Basically a very broad law, which is good, where they pass to the, let's say, executive branch to indicate who will be the regulator in Brazil responsible for, okay, especially the intermediaries, the VASPs, okay? It took a while for the president to indicate the central bank. Right now, the central bank is the main regulator for digital assets in Brazil. And started last year, in the beginning of last year, they started a process of public consultancy, talked a lot to the market, okay, this is what we need to do, what are the opinions from the market. It was a very broad list of questions. This was in first half of last year, and then beginning the end of last year, they now came up with, I would say, a written regulation doing the second phase of the public consultancy. It's funny because right now we have 4 different public consultancies, is that how you say, consultancies? Yeah, happening at the same time in Brazil. One, which will regulate intermediaries, okay, virtual asset service providers. The second, affects businesses done by virtual asset providers. The third one is just regarding stable coins and FX regulation. Brazil still have a very, I would say, hard FX regulation. And the third one is not exactly about crypto, but touch crypto. It's regulating the bank as a service businesses. The good thing is that most of the central bank, the areas that are responsible for the regulation, they understand the technology, they are very open to the market, so they are talking to everybody, from exchanges to banks to startups to venture capitals, foreign people, Brazilians. So they really did a good job in understanding, okay, what are the pain points and how they can come up with a regulation that will give the protections, will of course follow the law, but at the same time still allows for innovation. On one of these public consultants, which is more related to stable coins, then is a little bit more tricky, okay? It's a separate area at central bank that it's not so deep in the technology, and I would say we still have a lot of challenges regarding these. The FX regulatory framework is evolving in Brazil, but BRL, the Brazilian currency, is not a convertible currency yet. We are moving towards that, but still, and that is challenging. And I would say I've been talking the last 3 months way more with lawyers than with tech people and developers.
Glad to hear that. Glad to hear that.
Yeah, because and it's crazy because BTG, as a big player in Brazil, we are part of several different class entities. So the open market, the banks, the crypto, the fintechs. In each of these classes, they do their own, I'll say, they send their own opinions. So it's a lot of work, but I think it's very important. The central bank looked a lot to MiCA, okay, for good and bad, I would say, and a lot from the BIS papers as well, okay. So far, I would say cautiously optimistic about the regulation that will come. And we're probably going to have like the full regulatory framework in half this year, June, July, maybe.
Interesting. Let me pick up on that and turn back to Clara for a moment to start this regulatory, comprehensive regulation within your jurisdiction. I think, Clara, Liechtenstein is probably the closest to that. How's that been a benefit? And what challenges, and how's that been beneficial for the government? How's that been beneficial for the companies interacting with the government? And is there more that you want to try to do with that?
Certainly, thank you. Well, it has been very beneficial for us, and I think also for the industry from what I have seen from the market, because they really know not just in the financial market aspects what to do, but they have legal clarity, especially also for tokenization and the enforcement of that, so how the digital world is aligned and synchronized with the analog world. So all the questions that needed to be tackled and answered for the businesses to thrive, we have provided with that framework. So I think the legal clarity, the legal certainty that businesses have to focus on innovation and focuses on their business, there we scored very high in accomplishing that. However, having said that, we cannot rest on that success. What we have built up, what we have introduced now, as we all know, technology changes incredibly fast. The business model changes, the whole regulatory landscape changes, now with MiCA, for example, coming up. So we need to stay adaptive, and we need to keep on improving and further developing our legal and regulatory framework. So meaning we've done the right things, I believe, and have done the first step, but we have to keep on looking at where are the gaps, where do we need to keep improved. But I always say, well, we aim for progress and not perfection. Whereas if we just want to try everything right, I don't think it would be possible, and we would be outdated anyways fast. But so we need to have the mindset to keep innovating and keep adapting to the challenges and the developments that we see.
Yeah, no, that makes sense. Okay, so Andre, you made a really interesting comment that the regulators in Brazil have looked to MiCA for good and for not so good. Is this where you think Brazil is heading, needs to go, that level of kind of comprehensiveness, or do you feel like, Brazil should try to land somewhere differently? What's going to be best in your perspective, for Brazilian companies, banks, industry?
I would say when we talk about digital assets, digital assets is by definition global, okay? So I think you will never be able to be like an island in terms of a business, in terms of regulation. So it's good to look for what people are doing and try, if not to copy everything, at least to adapt, at least to get the, let's say, best practice, what would work in Brazil. And of course, I mean, Brazil have different laws that we need to pay attention. So I would say in a good way. When we take, I think the main pain point will be and not only for Brazil, okay? It will be the stable coin, the FX regulations, because I mean, it deals with the flow of money. It's a huge market. We're talking about potential trillions of dollars of a market, and that's where all the regulators pay attention, because that's where all the bad things happening. Not all, but some of them, okay?
Right.
So I would say Brazil will have it's like specific characteristics in regulation, especially regarding, there's some issues, how do you, what you need to do if you hire, for instance, a foreign company to provide technology for your business. There will be some specific things, because in that sense, Brazil is a little more closed than and of course, at the end of the day, the central bank, they don't want, all the central banks, they don't want to lose control. Okay, so they have a law that they need to apply. They need to follow the rules, and the guys sitting there, they need to follow that. But again, and I think a lot about that. I mean, we are talking a little bit about that before. We will have like a more standardized regulation. I'm not so optimistic about that because I mean, we cannot even agree on the plugs that you plug your stuff. So when we talk about regulation, I think it's a hard job. But again, having some, I would say, communications in a lack of a better word, it would be good. Okay, because again, I think one thing that is truly different in digital assets is that it's digital, it's global. So that brings a lot of challenge for the regulators, because even if sometimes they try to block some things or they try to put walls, not necessarily they will be able to do, because it's a very fluid, and this only talking about cryptos and asset class, stable coins. When you talk about tokenization, then the problem is way, I mean, you liquefy everything, all the assets, okay? Right. And so how to control that, it will be tough.
Yeah. So Korea has, as you noted, early growing pains, now more comprehensive. How important is it for businesses in Korea that there be, how comprehensive of regulation do you think is best?
Yeah, so as I mentioned, there is no market regulation in Korea yet. So I can say that there are broadly two types of crypto business. So number one is for the kinds of a crypto native business. So Bitcoin or Solana, the kinds of token, anyone can buy that token without a more developed regulation or something like that. Of course, it's common in Korea, but many of the other part is application sector. So we have a bunch of portfolios all around the world, but most of our portfolios in the West, they are building the infrastructure project, as known as a layer 1 or layer 2 or DeFi kinds of stuff. But in Asian market, there are so many contents and entertainment and gaming kinds of application sector using blockchain and Web3 technology. And to publish that kinds of application along with the traditional companies network, we need a clear market regulation. So the many of the Korean gaming giants are building their own Web3 gaming, but in Korea's situation by regulation, it handles crypto gaming as a kind of gambling. So it's funny that Nexon is one of the largest gaming company in Korea. They are turning their major IP named MapleStory into Web3, but they made a foundation in Abu Dhabi, not in Korea, and they will not serve for Korean market. That's a very not good stuff. So that kind of hurdle is existing for many of the Korean gaming companies. Hashit is not just as an investor, but as an ecosystem builder. So sometimes we are building some of the unique company with our capability. And one of our initiative is building the K-pop label with the decentralized manner. So we are owning our own idol band. The name is Triple S, and it's a 24 multinational member from Korea, Japan, Thailand, mainland China, Taiwan, that kinds of stuff. So the total member is 24, and we cannot use a token because of there is no market regulation yet, but we can use NFT for taking a governance from fandom. So using the NFT technology, the fandom of the Triple S can make a governance voting for which member should be participated for the next album or which song should be the title song of the next album. So the kinds of important voting made by fandom. So yeah, so beyond the regulation uncertainty, we are figuring out dealing with the NFT because government think NFTs are quite okay than fungible tokens.
They were really interested in our NFT custody registration role for that we introduced. Actually,
Interesting.
After Mika, and we had talks in Korea regarding that. Yeah.
Is Europe also considering your model as well on that? More
Sorry?
broadly? Are you? I mean, is there going to be a more broadly adopted?
Well, it would make sense because if NFTs, especially if they can represent really valuable assets, it would absolutely make sense that the service providers are also held to certain operational and compliance requirements in dealing with them.
Yeah, interesting.
To that point, actually, that was one of the loopholes that we had in the Qatari digital asset regulation. While we do ban cryptocurrencies and stablecoins in the current form, we would regard NFTs as loyalty programs, and it was very much something that a lot of the startups were looking into it in sports, in music, in ticketing, in arts. So that was an area that we saw a lot of growing interest from startups as well.
Okay, so I would talk about the U.S. regulatory environment, but I think it's fair to say we're about to see some change in the U.S. regulatory environment. Now, a lot of us hope that's going to be positive change, but I think it's fair to say that it might not be a linear process for the U.S. to get from where it is right now, in terms of a lack of market structure regulation, multiple regulators in the space, lack of clarity, lack of harmonization, federal and state, across our regulators, to the place where we want to get to. But presumably, the US will get to market structure regulation. Presumably, we'll get to stablecoin legislation. It's at least declaratory policy in the United States. We're not going to have a CBDC anytime soon. And then there may be other deviations and distractions from that in a variety of ways. What do you think the impact will be in your jurisdictions as the U.S. changes? And what does that mean for this question of global harmonization? Like, you know, we know we're not getting all on the USB-C cord anytime soon. But there's been a lot more convergence, I think, among non-U.S. jurisdictions, at least from our perspective. And what is this going to? Is this a positive thing? Is this a negative thing? And a change in regulation in the U.S. and potentially more opportunity for projects to launch, for activity to happen with greater regulatory certainty in the U.S. Andre, do you want to start with that?
Yeah, I'd say I'd be very interesting to see what will be the path that the U.S. will take, because what we've just been seeing in, let's say, the last 10 years is that Europe is taking the lead in everything related to digital regulation. Start with data, then crypto. Yeah, exactly. And of course, a lot of other countries, especially emerging markets, they look up to see, okay, what people are doing as a base. And as we don't have these reference from the US, and for Brazil, it's a new situation because we all say that in Brazil, I mean, my career in financial markets, Brazil was like you have a crystal ball because everything that happens in the US eventually happens in Brazil 5 to 10 years later, right? Now things are faster. But it's a very odd situation that having these this void space in the US. So depending on how things will move, which direction the U.S. will take. For instance, stablecoin regulation. You mentioned that, okay, CBDC will not be a thing in the U.S., at least for the near future. It will be very interesting to see the direction that the U.S. will take. It's not clear for me yet, okay? And then how it will go against or go together with Mika, because that might bring a lot of challenges for, well, doing business with U.S., right? Right now, what we do is that, well, we don't accept U.S. citizens in our platform. That's easy like that, okay? And I think most of the crypto companies, they do that, okay? They don't want to go to jail, okay? So in the U.S., the only country that can actually enforce these, right? Yeah, it is what it is. So I'll be very, it's not clear for me, it will be very interesting and important to see which direction it will take.
Maha, or I was just going to ask, because is this going to force, you know, rethinking this, you know, concept of not permitting cryptocurrency stablecoins? I mean, is this going to force a reconsideration of that?
Definitely. I mean, in Qatar and the Middle East in general, our currency is always backed by the US dollar. So whatever happens on a CFTC level, SEC level, we will be looking into it in our monetary policy very closely. And I think in this case, I think having had a very prudent approach is an advantage that Qatar had, because we are looking into other jurisdictions and learning from them. I don't want to use the term cherry picking, but it was an advantage that we did not go full speed regulation, because we did not want to create an area where we're encouraging speculative trading, but we're focusing on the underlying technology and blockchain real world assets. So for us, it's good because we're not going to be having regulatory arbitrage. We will have a lot of time to consider, and we will get to see the lessons learned from other jurisdictions before we tailor our policy. And the good news is, in Qatar, policymaking is relatively quick. It could literally happen in weeks. So I think this is an advantage that we're looking from Europe, from the US, from other jurisdictions. Also, Singapore was a very interesting model for us, and also Hong Kong. And I'm hoping that by the end of this year, we will be having much more regulatory clarity. There is a discussion on the central bank level that will be introducing a draft regulation for stablecoins as long as it's backed by US dollars. So we're fine.
Interesting. Clara.
Yeah, well, with regards to the US, I'd like to quote Peter Kerstens from the European Commission, FISMA. He always says, well, the US eventually, once they wake up, they will do the right thing after having done everything else first. And so now I'm really curious what they're going to be. But with regards to global harmonization, I think it's very aspirational, but not realistic. So we won't have that. And probably also it's a good thing, because the businesses require different circumstances, they require different framework conditions, and so we will see jurisdictional regulatory arbitrage, but also competition. So probably the jurisdictions are motivated to offer their very unique advantages and build on them and showcase them, and so that businesses can choose what really fits their need and their higher level goals. And I think that is not necessarily just a bad thing. But the only thing that is necessary, and this is a point I really want to make, where GBBC is playing such a big part, we need aligned definitions and certain standards. And this is something like on a meta level, not the really national regulatory frameworks. And sure, yes, if we have broader regions like now with the EU that have a harmonized frameworks, that helps. But on a meta level, we need clarity on certain on the taxonomy, on certain definitions and standards, and this is which clearly cannot be aligned through the governments directly, but where actually GBCC and especially Sandra's efforts are instrumental in helping in creating a meta level harmonized understanding on which to build then the individual legal frameworks.
No, I think that's exactly right. But to go to what you said about Uncle Sam waking up, it's fair to say that Uncle Sam woke up, but I think he's woke up cranky. So we will see. Simon, what's the impact of potential kind of significant changes in the U.S. regulatory environment for Korea?
Yeah, so usually Korea follows U.S. a lot, so there'll be a significant change along with the Trump's new administration. And I think from your last question, I don't think that we cannot reach that very high level of the harmonization. So there will be some strong harmonization for the AML and KYC, and maybe for some consumer protection for preventing the bad actors. But for the market regulation side, the blockchain is a very big business opportunity for the countries. So there will be a lot of competition to making better regulation environment to attract the talent and capital and founders and developers. So I think this kinds of competition between the countries to setting up the different regulation will be better for the industry. So one of the examples is Japan set up the stablecoin regulation for the first time in the Eastern Asia. It was good, but it's very strict. And very recently, Hong Kong set up the new and much better stablecoin regulation. It's more market-oriented. And I can say that overall, the later is better, we know. So Korea will set up the new stablecoin regulation maybe the second half of this year. So actually, we have our own think tank named Hashed Open Research, and using our own think tank, we are heavily advising the Bank of Korea and the regulator these days. And I hope the new stablecoin regulation from Korea will be the better from other Asian countries.
Good. All right, so I think we have a few minutes for questions. Are there any questions that folks have? See, this is always the regulatory panel, right? Yes.
Real good one, Priscilla Adams. So question that I have is, on the one hand, I hear, all right, EU has led the way in regulation, but is that actually a good thing? Is it over-regulated, to be completely frank? When you look at user numbers and adoption, you have retail users being driven out of Asia and institutional users being driven out of the United States. So my question is this not actually an opportunity for the US with their regulation to further drive the amount of institutional adoption that they have?
So what do you think? I mean, is MiCA and payment service, is that over-regulation? Is that too much? Is it driving out the people that that countries want?
I can give an outsider view about that. I think it's a little bit over-regulated. And you mentioned the point is precise. I mean, when you look to the list of, like, say, 10 top countries by crypto adoption, there's none in Europe, right? But again, I think that was a political decision that the EU did some years ago. Not only crypto, but, well, we will be the leaders in terms of digital regulation. And at the end of the day, I think for the US, I mean, if you think like it is opportunity, okay, how can we make things like more easier, maybe a little bit lighter in the beginning of the regulation. In other countries as well, you see the examples of Hong Kong. If you compare Hong Kong to Singapore, Hong Kong is a little bit late right now, but Singapore have a decent framework, but it's a little difficult as well. And that will be the competition that we will be seeing. Okay, so I think this will happen more and more.
So I see MiCA is setting a tough bar. So that's for sure. But I think that is actually not so bad for the institutions. Actually, in Europe, we see it's a catalyst for institutional adoption, because now institutions and bigger organizations are having the legal clarity to also actually venture into that space. It's tougher for the bottom line, so the startups, the smaller businesses, to actually comply with the compliance and regulatory requirements. For them, it's actually quite tough, and there we certainly need to double back and maybe look at MiCA or different interpretations, how we can make it more proportional, so that it meets the different risks represented from the different companies, because they are smaller or because they're bigger. So to have that whole risk span addressed in an appropriate way.
Other questions? Yeah.
Maybe just one thing to add here. I mean, like it's also this is a motivation of the population, right? Of the individual jurisdictions. So I think crypto market adoption is like the incentive of people. Like, what are the extrinsic motivations that push people into using crypto, right? I think in Europe we just have a mentality of like having a savings account and it's fine. For Brazil, they are introducing transaction-based reporting requirements from May 2025 onwards. On a monthly basis, every single transaction needs to be reported to the Receita Federal. So, going to be very, very interesting.
You mean the PIX thing? No, it actually went down last week. Yeah, I mean, I would say there was a big digital revolt, I would say, and the government phased down these regulations. Basically, what they're saying that we already do this in crypto, okay? Every transaction we need to report, all the exchange, they already need to report for the Brazilian IRS, all the transactions, okay? But what the government tried to do is, okay, everything over 5,000 BRL reais in PIX is instantaneous payment in Brazil, should be reported by financial institutions to the IRS. So I'd say there was a little bit of like a revolt, especially in social media. And actually last week, the government cut off the regulation,
and that
which
will be
was a good thing.
And as a last point, that will be an interesting thing. Obviously, governments intend a variety of things. The people will have a voice, and we'll see how that plays out. I think we could probably keep going and discussing, but our time is up.
It's not so boring at the end of the day.
Yeah, there you go.
Time for our picture.
Yeah, exactly. So let me thank the panel.
Thank you.
Andre Portillo, Clara Guerra, Simon Kim, Maha Al-Saadi. Thank you all for being here and listening. Back to GBBC.